Hey, what's going on, everybody? My name's Andy. My channel's Finding Value. If you like making money, click subscribe. I can help you do that. Give me a thumbs up for this content. I'm going to answer a question here. The question is, says so many people on YouTube channels are talking about an overall crash in the stock market. I would find it pretty interesting to know more about commodities during a broad stock market crash. Everything will go down for sure, but some commodities won't fall as much. Which are stronger in a crash scenario apart from precious metals? Isn't oil the first to drop like crazy? Will uranium quickly recover? So on and so on. So the scenario that you are describing where everything crashes out is when housing goes down. Now, the scenario that I am seeing is not that scenario. The scenario that I am seeing is I'm seeing an expansionary phase in real estate. That will not crash everything in the stock market. Only certain sectors will crash in the stock market, in my opinion. Now, we've got a lot of people out there on YouTube pushing the scary narrative. They get a lot more views pushing that narrative than you do pushing a rosy narrative. So they're going to get a lot more views, and they're going to be basically guided based off of feedback loops for YouTube, putting out scary information, putting out things that appeal to people where they say, I have to see this because I'm afraid. So they push out this afraid kind of narrative where they get a lot of views. So be careful what you listen to on YouTube. And I started this channel because I got enraged at how much on YouTube that I saw that was misinformation. And it was mainly around real estate that really pissed me off. I mean, I got pissed because these guys were like, oh, real estate's going to fall 20, 30% in 2021. I'm like, how the hell is that going to happen? Like, what data do they have? And then they just say unemployment and all these other things. It's like unemployment doesn't drive real estate. Supply and demand does. Unemployment does not, it doesn't care. The biggest housing booms in the history of the United States happened under rising unemployment. I don't know if you guys know that. 1970s, the crash of the Great Depression. Did you know there was a housing boom right before that and everything collapsed? The housing market took that thing out, and then all the margin loans that they put on it. We could see a massive crash in the stock market, but I think it will be contained to certain sectors and areas. It'll be like a dot-com bubble crash where it didn't affect commodities. It may affect them a little bit in the beginning. It may draw them back a little bit, and then they'll just rocket higher. And I'm going to show you something. I got the housing starts pulled up. And one thing I want you to notice in this housing starts that I pulled up right here, well, you're going to lose me. These are housing starts. I have it right pulled off of the website. This is the Fred. This is Fred economic data. It's Fred St. Louis Fed on the top. This is housing starts. So this is new home builds, and the quantity of new home builds is what's being plotted. Every time this is going up, this expansion phase, we have no recession. Look, up, no recession, up, no recession. This one we're pulling out of recession, it's going up. So an expansionary phase where it's up over 1.5 million and it's going up, there are zero recessions. And we're coming out of a recession and we're heading on up, and we're at 1.669 million for December 2020. We're heading on up in an expansionary phase, and we've never had a blowout recession where everything crashes during an expansionary phase of real estate. And that is why I say that expansionary phases are inflationary, which means inflation is to expand. A deflation is to decompress, it's to deflate. So if by definition you can't have deflation when you're inflating under an expansionary phase, and this is the data here that supports that narrative or thesis. Look at this chart. The recessions are these dark lines here. I don't see all of these recessions happen when we're on a recessionary collapse in real estate. All of them outside of the dot-com bubble right here. This is a massive dot-com bubble. It was a very short-lived recession, and it was mainly contained to stocks. Oil during this period went from $10 to $140. during that time frame. Now, could this draw it down a little bit? Sure. It could affect oil a little bit, and oil could come down a little bit. But one thing to keep in mind, I mean, everyone is so worried about the crash. I get so many things about how everyone's worried about this big crash. Now, what if we have the crash? Okay, so let's say we invest in some companies. I'm already invested. I'm heavily invested. All right, so I'll take SM Energy, for example. I went in at $1.50. I was not afraid. I was like, I'm more afraid to not be in this than I am being in it. Now I'm up almost 700% in SM Energy since October of 2020. And right now it's 2/7/2021. Now, if we see a 30% pullback, and let's say SM gets cut in half. All right, let's say it gets cut in half. So it gets cut in half. 11, let's say it goes down to like $7 or $6. Let's say it goes down to 6. I'm still up hundreds of percents. Now, I don't see, if you look at the Fred charts again, I'm going to go back here. We had this recession here. Now, where do you see a back-to-back recession? I see one. This isn't back-to-back. This isn't back-to-back. Because this one was March 1980, and then we had one July. Okay, so this was a back-to-back one right here. This is about a year apart. There was the recession in the 80 and 81, and then everything else is spread out quite a bit. I'm not seeing this huge. You got to see housing crash, because this right here was a housing crash, came back up, and then it crashed again. This housing crashes cause these recessions. So I'm looking at the housing starts. If we see that the real estate market starts to come over and go down, that's your cue. That's where everything's going to blow out. So you got to watch the housing starts. You got to watch real estate. You got to look at the real estate prices, the days of inventory on the market, all that stuff. Days on the market, inventory, and so on. Right now, everything is screaming that we have a massive shortage in housing and that prices are going to rocket higher. Just absolutely destroy it. And I know people don't want to hear that. They want to hear, hey, I want this to crash 20 to 50%. Well, it's not going to happen. You're going to see house prices go up 20 to 50% per year or couple of years. I mean, this is going to go way higher. And if we see that, it's going to be inflationary. And if it's inflationary, we're going to see higher interest rates, and the rotation of money is going to come into commodities. So that's what I'm looking at. I don't see a crash coming. The housing market says no crash is coming. And perhaps it'll crash in technology stocks and be contained mainly to that area. And then what you're going to see is money rotate out. It will affect the commodity sector a little bit. You may see a pullback of 20, 30%, but the commodity sector is already volatile as hell. It already does that anyway. So I'm kind of in it. I'm ready to win it. And if you guys, if you want to join us on this ride up, we're going to be holding the hands together, singing Kumbaya, saying, do not sell. Do not sell. Okay, so if you like this channel, subscribe. Give me comments below. I'll try to answer it with videos so everybody can at least see my viewpoint. Give me a thumb up for the comment, or for the content, I should say. And thank you for listening. This is Finding Value.